book doesn't work, but even at other cycles, we don't really know what the impact is going to be of these government programs, of all these deferrals, how much of these deferrals, will end up going back to good, and how much will end up having to get charged off. And so we really won't know that until we start to move throughout this quarter. So, 10Qs, we might get some update. May conferences, if they go virtual, we may get some update, but we really just don't know.
So why are JP Morgan and Bank of America leading the declines that we're seeing today in the major U.S. banks?
So I think, when we saw the numbers come out yesterday, I think some investors just sort of looked at the top line of reserves, and with those numbers perhaps thought JP Morgan is conservative. Look at Wells, they're much lower. We look at the dollar provisions, but we look at those provisions, versus their loan book. JP Morgan with a 2.5% ratio, Wells Fargo sort of less than half of that. But then we saw Citigroup come out today with granted less dollar provision number, but their ratio well exceeding that now of JP Morgan, perhaps making JP Morgan, who appeared conservative, now seeming less so. And, Bank of America as well. Again, the question is sort of how bad things are going to get from here. How well you prepared? The card business, where all three of the banks that we just discussed are very big in this. Wells Fargo is less big. That's where we're seeing the majority of the provisions. That product tends to have the highest loss rate. It's unsecured. It's a thing that people don't pay first. And so I think that's, going to be the area of focus in the coming month or so.
So, Allison, I know you listen to all these conference calls, and these big bank CEOs, they really have great visibility in terms of they see lots of the global economy around the world. Did they suggest how long they anticipate a downturn to last? I think most people kind of dropped the discussion of a V-shaped, but now more of a U or an L. What are they kind of thinking at this point?
Well, I think, one contrast maybe, and again, I think a lot of these managements are sort of calling on their research departments. And again, this goes to the quality of their reserves. So Bank of America, expecting a big drop in 2Q like everyone else, but also expecting negative growth or declines in GDP for several quarters to come, versus JP Morgan that is currently factoring in more of a rebound in the back half. That being said, I think all managements do sort of acknowledge that we don't necessarily know how long this is going to go on. And so the key risk, I think, there to investors, obviously, yes, it's the provisions, but it's the dividends, where managements are committed. The Fed said they don't see any need for cuts at this time. But to the extent that this downturn is unprecedented and we don't know how long it's going to go on, we don't know if there will become more pressure if this becomes a prolonged situation.
Allison Williams, thanks so much for joining us. We really appreciate it. We know you're busy with all these big bank earnings, but we appreciate you taking the time. Allison Williams, she's a senior analyst covering all things